And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. And we've got Cody back. So we're going to be much smoother here today. We've also got Mark and myself here. Tim, Mark, how you doing today?
I'm not doing too bad, actually. You know, I look forward to the day where I can scoff at pleasantries, again. But for now, in the time and life we're in, I will acknowledge your insincere, lacking any true meaning request to ask how I'm doing.
You ever have somebody actually tell you when they're really not doing well on a day, they give you the whole detail and you're like, why did I ask them?
That's
Like
why that's why it's insincere and lacking any real meaning, because you don't really care.
No, I care. I'm an
But in
empath.
today's society, I will acknowledge your lack of sincerity.
I appreciate it, Mark. I appreciate you going with the crew here. Cody back. Appreciate you, Cody. And a couple of things. Number one, Cody, you had a baby last week, and this is the first time you're back officially on the halftime show. I know you popped in for a minute or two last week. How are you doing, young man?
I am excited because my little boy gets to come home today. So getting the house ready, doing all the normal checklists, laundry, dishes, vacuum, clean everything, washed all the sheets in every room, washed the couch cushions. Probably went a little overboard, but you know what? I'm excited little guy's going to be here today.
Dude, congratulations from two fathers here, and Noah just joining us as well. A bunch of men who've also had kids, and it's just a true blessing. It's the true thing in life that matters the most. Your family, your community. What a joy. It's going to be fun, bringing that young man home, staying up at nights and all that kind of stuff. But what is his full name, by the way?
Liam Allen Mackey.
Liam Allen Mackey. Pretty awesome, Marky. Pretty awesome. And we miss Cody, Mark. We had some technical issues when he was not here. It's just a good reminder of the value you bring us, Cody. Keep us sane, keep us on point, make sure that we've got everything set up, all that kind of stuff. Let's break the markets down here, guys. Let's talk about what's going on out there. A big rally in the market. It actually started last night in the overnight futures market. In fact, if you can give me a 5-minute or 15-minute chart, we can take a look at this. So much of this rally, and actually back that up to like 15 or an hour, because really the range is about 10 days now, it feels like, where we've been bouncing between 2,400 or so up into this 26 and change level. We're approaching resistance. Mark, why did the market start rallying last night, go limit up, and what is the strength to be accounted for here today?
It's pretty simple, actually. And we've been talking about 10 days about these the bullish thesis, the moderate bullish thesis, and the bearish thesis, right? And there's individuals in each of these camps, and there's a lot of individuals in the bulls camp who have this very simplistic. We're going to beat the coronavirus one day, trillions of dollars of stimulus, and everything's going to get back to normal. And there's a lot of individuals out there, and when you have any positive news relating to anything, whether it's stimulus, whether it's the coronavirus, that is a potential trigger to the upside. We're seeing a decline in the number of hospitalizations. We're seeing a decline in the number of cases in New York, which is the epicenter here in the United States, obviously impacting lots of different areas. And that hope and that euphoria that, hey, the worst of it might be behind us. Hey, we might be at this, we've talked about this flattening the curve. It looks like we're flattening the curve. That kind of hope and euphoria can trigger a massive rally on any given day. Mm-hmm. And that's what you're seeing today it's a hope rally, right? It is a total hope rally that the worst of us might be, where we might successfully flatten the curve. And that simplistic viewpoint can carry with it a lot of momentum, because remember, and this is something we've tried to emphasize for a while now here at Tackle Trading, this market is entirely driven by sentiment right now. Mm-hmm. Like fundamentals don't matter right now. They will one day, and bears actually would be like, you people are insane, but we'll save that for later in the show. But to understand price action right now, and today in particular, you have to understand that the entire market battle on price right now is entirely sentiment. in a world where we don't know so many things. And I wrote this 6,000 word article for the Trading Justice newsletter. There's so many things we don't know, like massive, gigantic. Basically, fundamentals are irrelevant because it's all guesswork right now. Guesswork by the bears, guesswork by the bulls. Now, some of that guesswork, in my opinion, is better than others. But the price action is entirely driven by sentiment. 100% probably will for some time now. And so when certain things trigger sentiment, they're going to win that day. They're going to win that day. It's this overarching. And for 10 weeks at Tackle Trading, we've been talking about this concept of an ongoing news story, right? Mm-hmm. That we're in the midst of an ongoing news story, that you don't get to determine the cycle of the news. You don't get to determine when a political official says something, or a government official, or somebody tweets about oil, or like, you don't get to decide when that news is released. You don't get to decide the nature of it. But you do know that it's coming. And so the ongoing news story is one of the reasons that swing trading is so maddening right now. Because what will the news be 2 days from now? What will the news be 10 days from now? You don't know. But the news of that day, and this is one thing we know from an ongoing news cycle, the news of that day trumps, which is why day trading can be so profitable. It's why you have to leave your opinion, something you've heard me say several times in the last 2 weeks. You might be an overriding bear and say, listen, you bulls are crazy. But when you get into your day trading, when you get into your short-term decision making, you have to leave that opinion at the door. And price action is king. Technical analysis is king. Day trading systems are king. And so that's what's going on today. It is just another day in this very, very, very long. Are we still live?
Yeah, we're going to flip the screen share to Noah. Noah, you're on mute, by the way. I think Cody out there in Hawaii, and they're slowing down the grids anyway, Cody, but you weren't getting stable internet signals, I believe. So we're going to flip it over to Noah. Noah, we're going to get Mark's final
I swear
thought.
they're throttling this thing.
Oh, I know they are. They have to be, right?
Yeah,
you know,
absolutely.
They absolutely have to be. We've all been seeing some internet disruptions here and there, anecdotally. I wonder, if the grid and the systems can actually sustain this for quite some time.
I think they just assume that no one else is up at 6:30 in the morning in Hawaii.
Sure. Yeah.
Using the internet.
Possibly. Although I get the worst disruptions, I guess, kind of like just at night when everybody's online, so it is what it is. Mark, finish your thought there, and then we're going to go to Noah on the technicals.
Today's price action is no different than any other day since this whole thing came, and it's going to be no different for a long time. Eventually, fundamentals will matter. Eventually, one side will win the economic argument when the actual data comes out and we see the results. But for the last several weeks, for the next several months, sentiment, the day's sentiment is going to win, which, once again, day trading, there were some really nice day trading signals, lots of resistance levels that broke out after prolonged consolidation. Sentiment is going to win in the short term each and every time, depending on the daily news cycle of that day.
Right. No, what are you seeing in the chart here? Because obviously there's a range here on the intraday. You've got that back and forth between 2,400 and 2,620. By the way, welcome and great to see you, young man. I know that you were traveling over the weekend. Yeah. How are you doing? And then what are you seeing in the chart?
Well, fantastic. Not overly surprised by the movement up and the size of the movement up. Just like Mark said, it's pretty typical. If you look at the size of the candle compared to, I don't know, we had a candle a couple days back that was about the same size. So I think the optimism is there, and hope is not the greatest strategy in the world, but there's that resistance zone in there. I think is really, really key. I wouldn't be surprised if it poked a little higher. But I still think that we've got a rough road ahead of us. Then, this may shake out still. So we'll just keep an eye on that. But we got that moving up enough to cause a little 920 crossover. And, we'll call it 2630, 2600 zone is going to be an interesting price point to watch.
Yeah, this little range here that we're in, obviously on the daily chart, you popped up above the moving averages, but you do have that intraday resistance. If we do break above that intraday resistance, Noah, just from a technical perspective, where's our next fib target? Where's our next support target?
About
Where do you think
2,800 ballpark is
that
the
we're
next
looking
big
at?
zone. Yep. So next big zone, about 2,800. And that actually coincides with some old support neighborhoods. So, yep.
Market feels like it wants it, Mark. Do you think we're going to see 2,800 in the short term?
I think there's to say, okay, so let's understand this sentiment battle once again. Like for 10, 11 years, bears have said, well, one day something's going to happen. One day, and they'll point to data, they'll point to this. Bears have a really hard time with the something bad's going to happen one day. And right now, all of the strongest bearish arguments deal with down the road. Corporate earnings are going to be really bad. Companies are not going to hire back in the future. Consumer behavior is going to change. Credit defaults are going to happen. Unemployment and recession is going to happen. There is so many one-day arguments by the bears, and they're very compelling. They're very logical. But bears have a really hard time with the one day in shifting sentiment, because most market participants, they haven't studied the coronavirus for the last 10 weeks, right? A lot of them don't even think the coronavirus is, or COVID-19, excuse me, is a big deal. I mean, you have a massive percentage of market participants who don't even think this is a real thing, right?
Yep.
And so any positive news is just going to play into their already existing narrative. And so in the short term, the bears, the one day, they don't have anything to point to. They'll say, well, unemployment. Well, bulls will say, well, yeah, but that's all just going to rebound as soon as this gets over. And hey, we got evidence that this is going to get over. It's a fascinating psychological battle that's going on right now. But realize that in the short term, bears are pointing to things that you can't see today for the most part. They're theoretical, they're hypothetical. They might be logical, they might be sound. You might agree with them, but bulls can say, hey, look, we're flattening the curve. Everything's going to be good. To think that in the short term we can't see upward price movement would discount and be, well, we know markets can be irrational. We know markets can be euphoric, and so to say that you couldn't in the short term see upward price movement, I think that would be naive. Now, that doesn't say I'm in the ultra bearish, bullish camp, right? Because I'm not. I'm in that moderate, cautious, navigate this market with extremes. If it all just rallies in the short term, hey, I'll miss that. Because there's some really, really, really good bearish arguments on why this is going to be a prolonged societal changing issue. But that doesn't mean you can't take advantage with those day trades, right? That doesn't mean you can't take advantage. You just have to leave, and it's hard. I get it. If you lean towards bearish or really, really moderate conservative bullish side, it's really, really hard to place day trades in the opposite direction. Short-term swing trades, really hyper 1-2 day things on the bullish side in the opposite direction of your other belief. That's hard, right? But you have to leave your bias at the door when you're day trading right now.
Yeah. Back this out to a weekly chart if you can for just a second here, Noah. I mean, we've been talking about this for weeks here on the halftime report. There's three basic areas of the market that I think that people are trying to process and understand. One of them is the virus itself. And obviously it created that real selling. The sharp selling from 3,400 down to 2,200 on the S&P. You've got that alligator pattern here developing, Noah. So a little bit of a snapback here is not unexpected, even on the technicals. But can a technician point to this market, this chart, and say, we've got nothing but clear sailing ahead? I mean, I think the bulls still have a lot of zones in front of us here that are going to be a problem, right?
Yeah, I mean, 2,800 is the first one that comes to mind that I mentioned earlier, because that's a big, obvious support zone. So you got about 2,750 ballpark, 2,800, Again, 2850, 3000 is a big fat number. There's lots and lots of overhead resistance. And again, the other thing I'm noticing is the volume still, relatively low on the rally by comparison. You're seeing volume taper while markets are rallying. So, back on the daily chart, that becomes a little bit more obvious where, yeah, we've seen a bit of a rally, but the participation levels are not as hard or as heavy as the big sell-off. So the amount of transactions driving this back up is less. And those overhead support resistance zones, I think everybody then looks to, and I think they become, it's one part naturally occurring phenomenon, one part self-fulfilling prophecy, where just because those are key price levels that we have identified from the past, that becomes an obvious profit target for anybody taking short-term bullish action. And I'm not personally ready to go, full bull yet. I don't have a problem, Mark, taking short-term stabs at bullish stuff, or maybe even some calculated.
I just had a Tropic Thunder.
Yes, you did. Never go full bullish, right?
Never go full bullish.
Never go full
bullish.
Yeah.
We're going to keep that one on the inside. But I'm with you 100%. I mean, here's the thing. Anybody making a real strong case for the bullish side of the market right now, I'm reading some sentiment there, like Bill Ackman has done a complete 180 here recently, Mark. When did he become the poster child for the stock market? Why are we?
He's now the poster child for the bullish argument.
Yep, I mean, he is.
He is the poster child for the bullish argument now. Bill Ackman was out there tweeting at futures opens, right? And you have to realize on price action, right? It's the whole volume argument that Noah was bringing up. You have to realize that so few futures contracts are traded. What was the market up at futures open? It was up ridiculous, right?
Yeah.
And to say that that's a reflection even of broader sentiment is just dumb. I mean, so few market participants drive the markets before the markets even open. And all it takes is a little bit of steam, right? And then day traders come in because they leave their biases at the door, and computers come in, and market participants. It's a nice fanciful world, right? But it doesn't necessarily reflect the reality. And the reality on the coronavirus is there is and this is what, let's give a little coronavirus update. All right, so we're seeing cases taper off in New York. We're seeing cases and deaths taper off in Italy and Spain. Still at higher levels than they were a month ago, right? Still a serious situation. But this is something we've known about the coronavirus. If you've been following tackle trading for the last 8 weeks, if you followed the halftime report or any of our shows, we know this already about the coronavirus. The coronavirus isn't a boogeyman that comes seeping through your walls to get you at the end of the night. It is spread by human contact. That's how it's spread. It's a respiratory disease. There's still some things we're learning there, but it's not a boogeyman. It's not the fog. It doesn't keep. We know that. That's one of the reasons that I'm a moderate bull, because of what we know about the virus. We know in China when you lock down a society. We know in South Korea when you have lockdown measures coupled with really good tracking. We know that a society can get the coronavirus under control and return to a level of normalcy. A little different, still cautious, still have to be hyper vigilant about it, which South Korea has been. They haven't relaxed how they track, isolate, all that. That's one of the reasons they continue. They still get some new cases, but they're on top of it, doing a masterful job, giving a PhD course on how to manage a virus from a societal level. But we know when you lock down a society, cases go down. We know when those type of measures are enforced, when nobody's going out of the street in New York, when social distancing is being adhered to more and more, we know cases go down. We know this. Now, your average market participant might, because they haven't been studying this for 10 weeks. They haven't been on top of this for 10 weeks. They're just thinking they probably spend a few minutes a day and just looking at headlines, right? But we know at tackle trading, this is how the virus works. And when societies do that, we know how that works. Now, the big risk, right, and this would be one of the bearish arguments, is that if you don't do that, if you don't stay hyper vigilant. If you don't enforce social distancing, the thing will spread again. The virus is a very simple equation. There might be some variables like how many people are asymptomatic. There's some things that a bullish argument would say, hey, but maybe we already have it and the worst is over. Once again, hope is not an investing strategy. I hope that's true, right? I would like to go to the movie theater sometime this year. I would like to sit down at a really nice dinner one day. I hope they're right. But
well, let's simplify that question then. When do you think this lockdown ends from a federal level? When do you think the guidelines are pulled from the president?
But that's the thing, is if we as a society aren't hyper vigilant and we're not all asymptomatic, it's not good. It's not good. This virus, for all the individuals out there who say that this is just a flu or try to downplay it, let me be crystal clear. You are naive, you are dangerous, and you are literally the problem when it comes to the virus. If everyone would stay home for 3 weeks, a month, or however long it took, things could get back to normal really fast. The people that downplay it and say it's just the flu, let me give you a couple things. 70 doctors treating patients in Italy don't just die because it's the flu. We've had the subway workers. We've had over 20 subway workers in New York die from the coronavirus in the last couple weeks. That just doesn't happen because it's a cold or the flu. We had 2 Walmart employees in the same Walmart die in Chicago. We have mass infections within closed communities, whether it's a religious organization, whether it's a call center. These things just aren't the flu. The mortality, the contagious rate. If you are a flu denier, if you are this whole huge flu, you are part of the problem. You are part of the reason that this won't get better. That's just the evidence of what we know. This isn't a debate anymore. It is a very, very serious virus, but one that we can easily beat. Now, there's
the lockdown stays in place, right?
As long as we have a proper exit strategy. I read a brilliant article on this over the weekend. It's like, listen, we can return to normal. It's going to take, and bears would say, well, that's fanciful. That's never going to happen in the United States. It's going to take surveillance, tracking, and
in Kentucky, they're putting ankle bracelets on people who've been tested, who comply with the stay-at-home orders.
They have a lot of ankle bracelets to spare, I take it.
Must.
But that's how South Korea has destroyed this virus, because as a society, they were willing to do it. We still have individuals. I went out to get some grapes and a few green peppers in my quick trip to Walmart this weekend. And there were 2 guys there talking face to face, basically. And they were just like, I'm never wearing a mask. That's stupid. Like, we just have such a large segment. And you better hope, bulls, that your big out in all of this is that we really are massively already infected, that a huge percentage of us are asymptomatic, that it's already spread, and that there's not any mutation or second outbreak or the antibodies break down in a short time. That's your out. If you're right on that front, things are going to get back to normal sooner than bears would speculate. If you're wrong on that, what we know about the virus is that if we leave early and don't have these systems in place to track, contain, this is going to be a long period in the history of the United States of America.
What's really interesting about your perspective on this, Mark, though, is, and obviously you and I, we talk about it all the time, even with all of these potential risks, I still think you have mostly a bullish premise or belief in the long term. So
Yes,
do you think that we're just going to deal with these risks? We're going to handle them. You're just aware of them. You're pointing them out.
Once again, if someone's hearing me for the first time,
yeah,
it's like, oh, you're Dr. Gloom and Gloom. I'm actually in the moderate bull camp.
Right. No, you wouldn't have picked up on that if you just were listening to what Mark was saying about the
all you
virus.
ever heard from Mark Justice was the last 4 or 5 minutes, but you got to be balanced. You don't have and this is probably true of all periods of investing and trading, you don't have the luxury of letting your bias seep into your analysis.
Mm-hmm.
I mean, that's just a mistake. You're never going to be successful unless you're a pure technician that ignores the news and just trades the chart. Then you can still be successful, which is great about trading, right? You can know nothing except learning how to trade. But no, I'm in the moderate bullish camp. Like on my weekend show that I do prepping, how many bearish trades do you think I threw out there?
Oh, I'd guess hardly any.
I didn't put any.
Yeah.
No, I'm not telling people to short the market. I'm not telling people to go short. I'm not telling people. Now, if this thing rallies to 3,000, then I'm going to change my tune.
Isn't that the problem here, Noah? The higher it goes, the harder it is to make any kind of bull case. I mean, at S&P 2800, who's buying long at that point?
I'm a little leery of that. Like that 2,800 mark for me is a big line in the sand. Yeah, like at this point in time, like this resistance zone, if it breaks, I can take a bullish sentiment, trade bull to the bull side with trailing stops and that type of thing. But I think that as the economic data shakes out, I just can't imagine that we're not going to see at least a rough quarter ahead of us, if not two. And the average recovery time from a bear market's about 1,000 trading days. So we're talking a couple of years of average recovery time. Now we've never seen the stimulus package that big before. We've never seen the Feds. We have no idea how much money they're going to throw at this in the end. All of it, the kitchen sink. What did I read this morning? That Janet Yellen suggesting that Congress allow the Fed to buy securities.
No.
Oh, they've been talking about that for a long time.
Yeah, but they're just talking about it more recently, which tells me that that's on their radar. That's not, and that's something that I honestly don't know how the market's going to react to it. It could recover real quick. Like we could see V-shaped recovery, but I'm willing to miss out on V-shaped recovery because,
Oh, that's a taboo word. You don't say that.
Don't say
which fear miss out. Which word? I've said so many taboo words. It's hard to nail down which one. Which one?
That's true. I was gonna say V-shaped recovery. No, you don't say that.
It's possible. Anything's possible. But I do think that whatever rally we get here is suspect, and that there's another. I still think we get another leg down at a minimum.
Yeah. And I'll bring you back in here a second real quick, Mark. But let me kind of lay out a few things that I'm seeing here in line with what Mark is talking about, with what you're talking about, Noah. A break at 26, and I don't even know exactly where the decimal is. I think there's a zone in here on the intraday, probably 26.20 to 26.40, somewhere in here. A break out of this little resistance zone. We absolutely could see another 200-300 points to the upside. It would not surprise me at all. So you have to map out those scenarios in the short term. Longer term, I think the only way we really get back to recovery is if you actually have a functional and workable cure to this thing, some kind of vaccine, guys. And Cody, I know that from the scientific perspective, everybody seems to be rushing towards that. I do know on the testing front, give me a quick look at CVS, if you will, Noah. In conjunction with Abbott Labs, Mark, they're going to be doing drive-through testing. The
number of labs that have started putting out different types of tests is amazing. And this is, I know that right now when we're still in the middle of this and day by day, it sounds like things are just awful and the sky is falling.
And you know why they
4 months for science and all these companies to develop a test for a brand new virus, and like you're starting to see it come through with all these different means of testing, both swabs through the nasal cavity.
You know why they're putting out so many tests? Because America kicks ass when it wants to.
Yep.
It's the sleeping giant of the American private sector. They all step up and they're like, hey, we got this.
And this is why I'm a moderate bull. I just am having a certain way I'm playing this market, right? But I believe in science. I believe that science will beat this. I believe in the American engine. I believe in American ingenuity. America kicks ass. But like Winston Churchill said, why I'm cautious, he says, what was his quote? And it's one of my favorite quotes right now. Americans always get it right eventually, something like that. Like
eventually.
I think the exact quote is, Americans always do the right thing after they've exhausted all other alternatives. So
What a British thing to say. I love that.
no, and I love that quote because it is very American of us. And unfortunately, on the coronavirus, I think that's how this plays out. I think we probably.
Here's the actual quote. You can always count on the Americans to do the right thing after they've tried everything else.
Yeah, no, but that's so true, right? And I think that's how we're going to handle and that's why I'm a cautious bull, is because I think we're going to screw up. We screwed up initially on this coronavirus. We were slow to the thing. I think we're going to screw up and go back to too early. I think it's going to spread, but I think eventually we're going to get it right.
So when do you think they pull the federal guidelines? End of April? I mean,
are we still at the end of April? Yeah.
Yeah. Noah, you think so?
I think it just depends on what we see coming out of New York, but also
Cody.
Have we seen anybody else expand yet? Like, have we seen expanding cases in Michigan? What about like some of the other big population centers?
Louisiana, we have. We're seeing some anecdotally good data out of certain areas. I think death count, I believe in Italy and Spain went down for the first time, Mark. You see these flattening curves in some areas. Even in New York, they had a 1-day reduction in deaths, I believe.
But you cannot compare Italy and Spain's trajectory. It's a silly, because like a month ago, people were saying, well, are we going to be South Korea or Italy? And for me, that was a rhetorical question. There's no way we're going to be South Korea because that's not how Americans are. I mean, once again, there's so many things I love about this country, but damn, we're stupid sometimes because we're prideful. We're cowboys. I mean, this is what I love about myself. It's what I love about Utah. It's what I love. We're cowboys, and we get made fun of that by Russians, by Europeans, that you're a bunch of cowboys over there. We are, and I love that about us.
Awesome.
Yeah, it's like herding cats over here in America.
Yeah, it is. It is. It's like herding cats. Like, so, I mean, we have our faults, and some of those faults are going to play out bad in this coronavirus. We didn't take it serious. We're tough. We're America. We're going to work through. And that's probably going to lead us to relaxing social distance guidelines prematurely. That's probably, Americans aren't even taking it serious on a large level now because we're a bunch of cowboys. But eventually, as Winston Churchill said, we're going to get it right. And in the meantime, a lot of smart women, a lot of smart men are working on vaccines and therapeutic treatments. They're cranking out tests. We will get a hold of this. Now, is there some economic damage that's going to happen? I think that's inevitable. Right. Mm-hmm. It's why
well, that's the big debate, right? I mean, I think everybody sees a light at the end of the tunnel with the lockdown. We're going to have life as we knew it at one point. Now, it's just when that is, what that looks like, and how people and their consumer behavior, as well as our societal behavior, changes. I see a lot of really great things potentially coming out of this. A reintroduction to building things in America. Abbott Labs, CVS. I'm seeing all these companies working on all kinds of different things, even Apple Computer. Give me Apple Computer real quick here, Noah. They just donated 20 million face masks, and they're saying even Apple is building 1 million face masks a week, and they're shipping them to needed healthcare workers. And
America, let's all say it out there. America kicks ass, but we're going to stumble our toe a few times along the way. We'll eventually get a hold of this. We'll be stronger as an economy. We'll be stronger as a society. We'll have learned a lot from our mistakes, right? Probably not going to make these mistakes if in 20, 25 years, another, coronavirus type, hits. We'll be prepared. Mm-hmm. Our pandemic institutions and everything's going to be better after this. We're just probably going to screw up that second wave of reintegration society. And that's one of the strongest bearish arguments for me, is that we're probably going to screw that up because we're just going to want to get back to work and not be patient enough to wait those few extra weeks, right? I know it's hard. We want to get back, but we have the reserve currency. And I don't want to go all modern monetary theory on you, but we have the reserve currency, and while that might lead to the death of the dollar 40 years from now, and we'll probably just spend infinitely no matter what, but like in the short term, we have the reserve currency. We can print our way out of a lot of that, especially if we're just willing to sit there just a little extra longer, but we're probably not going to be willing to.
We'll see. I mean, here's one anecdote.
What was that quote again, Noah? Because we don't do it right.
I've seen it two different ways. I think it was stated both ways. Exhausted was also used. So yeah, you can, let's see here.
You can always count.
Americans will always do the right thing after they've tried everything else.
Yeah, we're going to try everything else first, right? We're going to try everything else first, and that's going to prolong the situation longer than it needs, but eventually we'll get it right.
Yep. Stocks are up against resistance here. Noah, quickly flash through all the indexes, if you will.
Well, let's take a look at the old Dow. Dow's not quite as close to resistance, but similar percent rise. Let's take a look at the NASDAQ. NASDAQ showing strength. It's right up there in the resistance zone.
Mm-hmm.
Yep, it's clearing. It's got a little wick to clear, but it's already closed above the consolidated body so far. And what else? RUT's set its 20-period moving average. Not as quick a rally, but certainly showing possible higher low.
Underperforming on the stocks, but they're all
Yep.
pretty much trending in the same direction. Yeah, I even see that, by the way, in the Nikkei, the Euro, the DAX, across most major markets. You're seeing very, very similar price action from that perspective as markets are kind of trying to bounce back here, approaching short-term resistances. I'll tell you, we probably should start with crude oil every day, though. Bring up crude light if you will. And let's keep working through the markets. Then I got a bunch of individual companies I want to talk about. Crude oil. I mean, this OPEC meeting, they were supposed to be meeting tomorrow. They're pushing it till later in the week. Oil prices are down a little bit on the news. I don't know if that's actually what it is. I mean, there's this expectation that if the U.S. will not agree to cuts, Mark, they're not going to agree to cuts. Now, that being said, I saw out of the Kremlin over the weekend, they said, we're ready to make a deal. We saw the press release from Saudi Arabia confirming they were on the phone with Trump last week. I think that the global oil markets understand they need to curb supply. Now, will the U.S. comply? Will the U.S. get on board with this in the short term? Mark, what's your read on this situation?
I led off. I talked about it on Saturday. I talked about oil for an hour in my Commodities live report. Led off on oil's my favorite play right now. As far as low-level entries, naked puts, it's my favorite play in all markets right now, outside of maybe naked puts on gold, because it's gold, right? We'll talk about gold in a second. But at some point, the producers have to do something. They don't have any choice in the matter. Russia's economy, Saudi Arabia's economy, oil revenues are a massive part of that. They can talk and bluster all they want about oil and we can survive and pound their chest. That's just not true. And they certainly can't thrive. The United States has to have stable oil prices unless the Fed is just literally going to give people money. The capacity issue, which I've talked about for a while now, we're running out of oil capacity. There's going to be a time, if massive cuts aren't taken, that capacity is going to fill. This is why commodities, when you can get them cheap, always in the long term find a way to rebalance, because there has to be a natural rebalancing of commodities. They just can't there and just produce infinitely, right? Now, it's all, I mean, so I am a oil bull, but it's all a question of how you play it now, because there are really, really, really huge catalysts that could send oil down in the coming days, not weeks, not months. The equity argument might play out over months. Oil's right here in center. Like this thing will play out before equities. People aren't driving. People aren't flying as much. Industry isn't using much oil. We're having this huge demand shock, and we're having companies produce as much as they ever did in certain places. Something has to give.
How does the U.S. cut 2 million barrels a day, though? Where do they cut it from? Do they just close down the Gulf of Mexico? Do they say that, hey, listen, we're going to just shut down this region? Do they make equal participants cut back and curb production? What happens?
Once again, we're a bunch of cowboys, and if we're a bunch of cowboys, then oil men are the cowboy. What is the head rancher called in westerns? The boss man. They're the boss man on the cattle ranch, right? They don't want to be told what to do. That's not their. No. And so, once again, apply Winston Churchill's quote. Eventually, the oil industry will do the right thing, because after they've existed all other options. and so like they're going to be very resistant to forced cuts. I don't even legally think
You have companies going bankrupt, Mark. I mean, so what are we going to do?
like
Tell a
that
company?
ever stopped anything in America. Like,
Well, I'm saying like you're going to tell a company going bankrupt they can't sell $26 oil. So you're asking them to take a revenue cut, essentially. I mean, if you think about it, I mean, that's what it is. You're saying make less revenue right now for the hope that oil prices will go back up to 40 or 50 and you can become more solvent later, right?
Well, you're asking them to be part of a cartel is what you're doing. Like your whole life, you heard about the evil OPEC cartel growing up, right?
Sure.
Your whole life.
Yeah.
It's well, that's what we're potentially asking oil producers to do, is to become part of an organized cartel, maybe in the short term, but part of an organized cartel in the short term to manipulate price. That's what you're asking them to do. And once again, that goes against a lifetime of being American, right?
I love that price fixing is illegal everywhere except in oil.
Oh man, they got to have it at 45, Noah. I mean,
I
that's
know,
what they keep
right?
telling us. I mean, yeah, it's really, that's an interesting point. Yeah, just globally, let's come together and make oil go back up. It is what it is about this commodity, though. This is why Mark has always said the Saudi princes have his back. They haven't had you back in the short term, but Mark, it looks like they are going to come
But
around.
we knew when to abandon that. We knew the demand shock. That's why when this thing started, long before equities, we saw it in oil, and we were screaming at people, get out of oil, don't enter into new oil, because the demand shock was easy to see coming with coronavirus.
Well, here's the thing. I mean, let's say that you do get this massive supply curve. They're already oversupplied as it is. They're going to have to keep selling oil. I mean, what is it going to do to oil prices outside of short-term traders covering their shorts? Mark, Delta Airlines reported 90% revenue down in Q2. Okay. People are not traveling. In fact, I read a number from American Airlines out of LaGuardia, and they're in New York City. The airports there, JFK, I believe, they're down 95% in flights right now. They've cut their flights down to only like 10 or 12 a day, to where they're just not flying right now. So you're going to have continued demand problems we're dealing with. And this
no, we're not, Tim. Look at equities today. It's all over.
Right.
Yeah. Everything's
so
awesome.
Even if they cut, couldn't oil go lower?
Well, that's the thing. And that's why, even though I'm on the bullish side of looking for entries, wanting to get into percentage-wise of my portfolio, larger position than I probably ever had percentage-wise. But you have to realize that oil can go down in the short term for two main reasons. One, Russia has made it pretty clear that, yes, we don't have the option anymore of cutting. But we'll be damned if America doesn't come along with us. We're not doing this alone.
Yeah, that's the sentiment I'm reading as well.
And so, like, oil can go down in the short term for two reasons. One, trying to get all of these parties on board, that's probably not a 24-hour process, right?
Mm-hmm.
There might be disagreements. There might be battles. You got a big game of chicken. You've had a big game of chicken going on 4+ weeks now with Saudi Arabia and Russia, and now it's like, we're bringing other parties in. It was hard enough. I mean, you think about that. Saudi Arabia and Russia have been having a price for 4+ weeks. That's just two parties in the equation that have had a hard time. Now you're bringing in multiple parties. There's a lot of ways that can go wrong. And you have the demand side that even if they come on board, unless those cuts are historically massive, it's still not going to balance oil in the short term. Now, eventually it will. Eventually it will, because it's forced to. The capacity issue will force oil companies that we don't got anywhere to put this anymore. We have to cut, which will cut back production and stabilize oil and probably form that ultimate bottom. That's what's beautiful about the oil argument right now, at least the one I'm making.
I'll counterpoint one thing here. Isn't the biggest risk if they don't cut enough? Aren't oil markets already assuming they're going to all cut 10 to 12 million barrels a day?
First of all, you got to realize market participants are dumb. All right, they're simplistic. They're algo driven. They're, oh my gosh, Trump tweeted, let's send market
But it's like an earnings number, right? I mean, they're assuming we're going to get 12 million barrels a day cut across Russia, Brazil, the US, and Saudi Arabia. And if they come out on Thursday and they only cut 6 or 8, or the US has stipulations or whatever it is, I think the biggest short-term shock risk to this is actually to the
Oh,
downside.
100% the shock risk is to the downside.
Yeah.
But even if they come up with numbers that are good, demand is still
An issue.
crappy. But eventually the oil markets have to, like, literally have to be rebalanced at some point because of the capacity.
Yeah.
If you don't have anywhere to put oil, then you have to cut production even more.
Yeah.
And then eventually demand picks up as society returns. And I mean, there's a real opportunity in oil. It's all a question about how you want to play it.
Yeah. No,
How
I don't
you
know if you're
wanna play it.
No, I don't know if you're picking up on this, Noah, but I don't trust this rally.
Why would you?
I was like, I mean,
I wasn't sure what you guys were alluding to at all. I'm not that quick sometimes, but yeah, no, I've got my doubts. Again, long term it recovers, but short term, I think you're right about the risk being, the shock to the downside.
Yeah. I mean, a breakout of 30, though, you do have a moving average pocket there that could easily test 35. Who knows? I mean, guys, in the short term, I've seen erratic, irrational market behavior after these big disruptions. There's no question about it. So nothing ever surprises me just from price alone after you have these massive sell-offs. So a break of 30 to 35.
Today. Like, I'm a
me.
huge oil bull right now, but I'm to ignore the short-term risk. Like, well, oil is likely going down than up from this point. Like, but then, I mean, I just think positioning yourself getting into some oil, I think is at lower levels, right? It's not today. It's not like I'm going to go buy some oil. I'm really, really, really confident in this thesis, but there's probably some real downside pressure in the short term before that happens.
No, I'm going to throw you the easiest chart to look at all day. Look at gold and draw a line at 1700 and talk about the resistance potential breakout here, guys. We got a triple top up here at 17 and we're pushing it right now. Look at that beauty, Noah. That's what would you call that? An inverted head and shoulders. If you're looking at shoulder, head, shoulder.
I would for sure call that an inverted head and shoulders, because that's exactly what that is right there. Let me get the little drawing tool out so I can highlight that. But yeah, that absolutely is an inverted head and shoulders here. Let's get a good color. Boom. Got that breakout zone. And if we can break that neckline and break 1700, there's upside potential there for sure.
Mm-hmm. Mark, is there an easier argument in the markets than long gold right now?
Well, I mean, I don't think so. Like, especially like, and it's like I talked about this heading into the week, as far as one of the plays that I advocated as far as, what to do with gold. It's like, listen, like when things are at resistance, like I'm just not a huge like buy right now from an investing standpoint. When things are at elevated price levels, I'm not. But as far as like comfortably selling naked puts at lower levels, like on a GLD, you're still getting reasonable premiums. I don't know if there is a trade that I've been more confident in ever. The fundamentals on gold are insane.
Yeah, they're very sound.
This is why when they were selling off, to a man, all of us were like, this is good because you get to buy some at cheaper prices. Like the fundamentals, like it's insane how good the fundamentals are on gold.
Well, look at the historical reaction. Like we had the crisis in 08, 09, and then it rallied for 2 years after that, strength wise. So I'd say we're in a very similar situation here as you were back in 09. Is like you're seeing that, printing press getting turned on. Who knows how modern monetary theory is really going to work. And I think the gold bugs they're going to still have a lot of interest. And I think the price upside's huge, fundamentally speaking.
Mm-hmm. No, and so it becomes a question of how you want to play it, right? And that's the thing, and that's the things that I share with people is like, I know I'm conservative, like, but I think the exact thing I said, I was like, if somebody said that gold's going to be at 2100 at the end of the year, I couldn't say they're wrong, right? Mm-hmm. It's not like oil or stocks. If oil or stocks rallied big, I'd be looking to short those unless the fundamentals changed. If gold was rallying big, I ain't getting in the way of that train, So it becomes a question of how you want to play it. Do you want to enter in for a little bit, sell naked puts, what level? It's just a question of how you want to play it.
Okay, give me the dollar next. Let's keep breaking down the markets. There's a bunch of companies I want to get to here in just a minute, and we're going to continue all of these conversations as we get down through them. Coda, you did the Forex report over the weekend. As always, you're my Forex kid. I like it quite a bit how you go in there and do those reports. You found your voice on that, no question about that. What you read on the Forex markets right now, specifically the dollar?
What you're seeing is kind of what Mark alluded to earlier, is that we are seeing the US dollar act as a reserve currency. And for a little while, we were seeing money move into the Japanese yen or the Swiss franc, which are the other two reserve currencies. And we weren't really seeing anything move into the dollar. And now we're starting to see money move back into the dollar. And what that kind of says is, after all this global corona problem is over, which economy will recover the quickest? Not necessarily a V-shaped recovery, but just recover the quickest. And it seems like everyone's putting their bet on the U.S. economy.
It's not a bad bet, right?
No,
Not a bad bet.
Not a bad bet at all.
We have the strongest financial institutions and systems in the world. Yeah. And we have the #1 reserve currency. Yep.
Yep. So you're starting to see money flow into the US dollar.
Plus, we cheat the best, right? So
we set the rules. Yes.
Yeah, I mean, we cheat the best. Like, come on.
You're not cheating, you're not trying, guys. No. But in all seriousness, like with all the stimulus and lowering and all these things that we see going in, it's kind of counterintuitive when you're like, wait, so why is the US dollar looking bullish? And it's because we've said it before and say it again, it's the least ugly of the bunch. And when the market does start to recover and the economy starts coming back globally, the US is going to more than likely recover quicker. And you see that of why money's flowing into the US dollar. I highlighted a bunch of really good setups, none of which triggered. So guys, if you watch the Forex report, wait for those setups. Once they trigger, they should be some really good trades out there.
And Noah, we were talking about this the other day about how gold and the dollar can decouple at times. We're seeing it right now, and the markets as well. Dollar's rallying while gold's rallying the last week or so. They're both going up at the same time. Money moving into safe havens and assets, really, really interesting. By the way, Bitcoin is up 40% off of its lows. I guess we're in a bull market on cryptos now, or maybe just a bear retracement. It's funny how these percentages work. The exact definition of a bull market, Noah, is a 20% gain from the bottom.
That's a good way to ballpark it, but I would not call it precise. It's a ballpark. That's all that is. It's saying historically, this is what it took.
Right.
That's what it's saying. Historically, that's what we've measured. But this is a different, I think this is one of those things where, one size fits all definitions. I've never really had good luck with, because the fact that it hasn't cleared old support resistance type thing, same thing, like,
same thing with the S&P.
Same thing. Yeah. Exactly.
I mean, how do you call the whole market in a bull market just because you've come off the lows? I guess I don't get the arbitrary.
Well, it's funny. It's like Roku, like these high flying, high moving stocks. Roku's always in a bull market, or always in a bear market. Everything's just become Roku.
Right. Yeah. That's right. Some companies I want to talk about here. Actually, I want to get your take on something here, guys, and bring up Disney would be a good one to look at. Disney has so many contracts through ESPN and sporting. Obviously, if you're a big sports fan like I am, like I know the three of you guys are as well, much of America, we love our sports. We're all hurting right now without the NBA, without March Madness. We're really missing those things.
What are sports? That seems something like from the history books that people refer to one day.
That what we love our sports.
Well, Americans used to love their sports till they went away.
No, they'll come back. The question is, when do they come back? I was seeing a lot of chatter actually online here recently about maybe doing some events where there were no fans in the stands and all that kind of stuff. I think it would be a really good thing for people to get a distraction, to stay at home, watch a ball game, right? But when does it happen, Noah?
I don't know. I'm an optimist. I renewed my season tickets to the old university football game. So I'm
you are optimistic.
I am optimistic that there will be a season.
Did you get a discount?
No, I actually paid 30 cents more than last year. I was pissed.
They actually raised their price on season tickets?
Just 30 cents, but I'm sure they'll go up over time.
Well,
yes.
I mean, if half the people are going to be there, they got to still make their money.
Yeah.
Well, and that's the thing is, I mean, our attendance number is going to take a hit. Like, it's really weird. Like, I have watched a couple of random sports with no, fans in attendance. Like I've watched, things like
A soccer
WWE
game, and you could actually
SmackDown.
hear on the camera the ball getting kicked, and it was the weirdest.
Yeah, I saw a soccer
you could hear
game.
them yelling to each other, like no more things that you don't hear because the crowd's usually so loud. Them like calling out to each other and what they're going to do in their plan. It's like, this is interesting.
Well, if you don't, this is the thing is if the masses don't have circuses and bread, then we get really, really restless. So I do agree with Sha 9929. I'm not sure how to pronounce that. But the LP of the masses, I mean, that's really what sports are, right? They give us a team identity. They give us, that sense of ungained accomplishment when your team wins. Like it's got all the things you want, right? So I'm an optimist. I think they'll come back. Hopefully we'll see it, baseball season as well. And, we don't see the NFL, playing. I think I posted a little tweet of one of those people running around in the bubbles. Like, I don't know if you've seen that where.
Mark, NFL by the fall, yes or no?
Yes.
Yes.
Labor Day, September.
Well, I'm basing everything on Winston Churchill. We're going to screw it up and no NFL.
All right. I think we
now we might have now, and if we do have NFL, it's all. I mean, because the biggest thing, if we screw up and we don't take it serious, which there's evidence that some areas will, but as a whole we may not.
Mm-hmm.
The large events clustering of people are going to be the last things that society embraces, right?
Sure.
Like
concert,
people will be more likely to go to a clothing store, retail shops, restaurants, like I don't know, but like
what's definitely going to take hold is people wearing masks more often in the US. Like this has been something over in China that's been natural, in Japan where people just wear masks even before coronavirus. I see that trend coming to the US where people are going to go to these massive events and wear masks just because, even after coronavirus. I do see that. So I think that if we do get football in the fall or whenever, you're going to see more people wearing masks even after this thing dissipates.
Yeah.
Because once again, the mask is not about you getting infected. It's about you being responsible and not spreading it to others.
Mm-hmm.
So I can now walk into a bank or a grocery store or any other place of business with a mask on and even some protective eyewear and not really be looked at funny.
Gloves, a mask, and we can't see your eyes. Yeah. I guess.
No, I mean,
it's a new normal.
It's a prideful thing. I remember I've seen some Facebook posts and this was a few weeks ago. I don't know what the current sentiment is, but it's like, you don't need to wear a mask. You're just looking stupid. I mean, but that's what it is, right? People, it's a pride thing, where they don't want to look like they're panicking. They don't want those type of things. In America, in 1918, everybody wore masks. It was illegal to not wear masks in certain areas.
Mm-hmm.
Wearing masks, I think culturally, once again, Winston Churchill, eventually we'll get it right. There's nothing wrong with wearing masks. And if you're worried about how you're looking versus how you are potentially spreading a virus, then you really need a evaluation. And I got to share something with you. What's a wonderful part about being a part of a community, which our tackle trading community is, like for me, it has become an extension of my family. I just love this. And I just have to give a sincere thanks to a member of our community who is sending each of us coaches 100 masks from overseas. And they're sending us all 100 masks to disseminate to our families, to those around us. And so I just want to give a huge, huge shout out and thank you. Communities can be amazing things, right? Like coming together in times of crisis, coming together to share information, coming together to just to be with one another. Mm-hmm. I mean, we're human beings. We're social creatures. We need each other. And I mean, I'm so touched and thankful that that is occurring. So masks are on their way, coaches.
Dude,
I think Paul's got the best idea there. corporate logos on your masks. I'm thinking team paraphernalia, like right colors to go. Because I'll go to the football game if I can wear the right color mask for
It'll be
sure.
the new baseball cap.
Oh,
for
Hey,
sure.
absolutely.
I'm just
Get
throwing
in on
this
that.
out right now.
Paul, make that happen. That's your business idea. Run with it. Don't,
If-
you know.
If anyone from McDonald's,
He's already got his Texas Longhorn one. He was all over it. He was like, guys, look at it.
if anyone from McDonald's is out there watching this at any point, my mask logos are for sale if I get a lifetime supply of McRibs.
But does your mask just have McRib sauce on it? Is like that how that works?
Well, I will, who knows what it looks like after a good McRib, right? But like, seriously, the big Mickey D's logo, you give me a lifetime supply of McRibs. My God, I pitch your product endlessly. So like, lifetime supply of McRibs, I'll put the McDonald's logo on my mask.
Dude,
So,
maybe like 100 McRibs. Going for the lifetime. I mean, you're going for the home run there. You want the lifetime McRib supply. Maybe 1,000 McRibs. Give me a coupon for 1,000 McRibs. If I
listen,
eat through
I want to
eat
be
through it.
McDonald's. You need to make me your spokesperson for McRibs because I passionately
You're a
defend
pretty
your
good one.
product.
You love the
To
product.
anyone who listens.
There's no question. Many more companies here. By the way, if you're watching our show right now, as always, welcome. Hashtag Team Tackle. Give me a thumbs up. By the way, in the analytics down underneath, when I see 150 people here and I only got 41 thumbs up, I'm like, all right, guys, let's get those thumbs up. Get the word out there and come back each and every day as we break down the markets one step at a time. Let's work through some companies here. Goldman Sachs here, then analyst Mark. Quick take on this. They said that stock buybacks are going to be down 50% this year. Companies just aren't going to do it. They're not going to want to use that cash for that purpose. Can the market have a long-term bull market without the buyback programs we've seen in the last 12 years?
No. I'm
Not gonna be
adamant.
profound.
Okay. Can it have a bull market? Yes. It can't have the smoothness that we've had for these really long periods of time.
No,
Right.
I think a lot of people don't realize how much money has been pumped into these markets by companies buying their own stock. It has been excessive. It has been a huge part of low interest rates and free cash. And the market's going up 400% in the last 12 years when the economy didn't grow 400%.
I mean, think about it from a supply demand issue. Like supply demand, right? Good old fashioned economics. When there's more demand than a supply, buybacks have been the biggest source of investor demand compared to all investing categories. They have. You take that demand side out of it, what I think you're going to see, does it end bull markets? No. Eventually fundamentals play themselves out. Eventually that. But what it does is you're going to see in the next 5-10 years, especially if buybacks got outlawed, which I think is a absolute possibility in a political climate post-crisis, you're going to see the volatility widen. So sell-offs are going to be a little deeper than they would have been otherwise, which isn't a bad thing from a trading point of view, right?
Mhm.
You'll adjust, you'll get used to deeper pullbacks, and those will be great buying opportunities for trades with upside, but you're going to see the volatility in the market increase without buybacks.
Yeah, I agree with that as well. Again, there are so many ramifications from what is happening right now over the long term. It's going to be really interesting. One of them is that stimulus that came out recently. Noah, Bank of America, who's one of the biggest banks in the marketplace, they said they were one of the first ones to open up applications for the small business loan side of it. 177,000 applications in the first day. It looks like they've already kind of dedicated about 32.6 billion towards this program that they're already earmarking from these apps. Pretty impressive.
Well, I think it's a logistical nightmare, mind you, for that. But
I can't imagine.
I can't imagine the demand's going to be through the roof. Will they be able to get the approval? Are people who need it going to be able to qualify, et cetera, et cetera? So I think there's a lot of questions there, but the demand, no doubt, is going to be through the roof.
Yeah, I think so. There's going to be a rush for this money that was earmarked. What happens if they run out? Are they going to print more? I mean, how much did they dedicate for small business payroll type stuff? Was it 350 billion, something like that? In the
I
first
can't remember
day,
the exact numbers.
with
Yeah,
one bank, they already have earmarked 35 of that billion, Mark. I guess they'll just print more. We'll see how that works. I'm really curious and really fascinated with how that rollout of the stimulus checks and the stimulus money and how all of it is actually going to work. Because all they did was pass a bill and say, here's $2 trillion, right?
I think everybody should apply for this, by the way.
Yeah, why not?
Why not?
Yep. Morgan Stanley, all the big banks come out over the weekend. They have a million things to say. Morgan Stanley's in the bull camp, Mark. They say the worst is behind us. I read the entire, investor letter though. And what's interesting is they were the most bullish camp on Wall Street over the weekend, in my opinion, outside of individuals like Bill Ackman, who are just dancing on his table right now. But even Morgan Stanley said it's going to be a 6 to 12 month timeline. So it's funny how these news stories, they get the clickbait, they get all of the emotions, and investors pile in and say, well, Morgan Stanley's calling for a bull market. No, they're not. They're saying they think that the worst of this situation might be behind us. It'll be a long recovery. And within 6 to 12 months, you're going to see economic stability. Isn't that the essence of the bull argument right there?
Well, no, and I guess the Morgan Stanley argument is as close to mine as there is. And it's how I'm approaching the market. So basically, if you buy the Morgan Stanley, which is right, there were some other big banks that had far more bearish. Let me give you one of them. Well, Jamie Dimon came out and said some very, well, not good things. You had, I can't remember who it was, if it was JP Morgan, basically saying, hey, GDP is not going to get back to where it is till the end of 2021. Goldman's Oppenheimer said earnings aren't going to return to their levels that they were for 4 years. So, but the Morgan Stanley camp isn't necessarily saying stocks are going to just get back to where they were immediately. They're saying that, but they are saying that bottom's price stability is here with us. Now, I don't know if a market bottom is, because once again, if we screw up, if consumer behavior doesn't change, if all kinds of things could cause a shorter term bottom. But as far as longer term price stability, it's why I put myself in the moderate bullish camp. That's why I'm only looking for bullish entries, albeit at lower levels. I'm not buying rallies. I think that's insane. Like, all right, that's insane to me. I mean, and if things just rallied up 20% from here, I would be looking to short things. But as far as those lower levels, it's how I'm approaching the market, because I think eventually there is, but it's an eventually argument, right? It's not a things are going to skyrocket to normal argument. So, I mean, there's opportunities in this market. There's ways to make money in this market. Naked puts have just been really, really, really solid over the last several weeks. So a conservative way, you're still making money without, all you have to be willing to do to take this Morgan Stanley, we'll call it the Morgan Stanley conservative approach, adopting their thesis, is just be patient, take some stabs here and there with naked puts, generate some cash flow, and be willing to miss out on a V-shaped stock rally, because that might not last anyways. We can trade that, right? Like day trade, like you can capture a large percentage of rally, get out and readjust. But it's just I guess who I'm talking to now is the long-term investor. Well, I'm going to push my chips into the table because I think there are better ways, at least for me, to approach this market than a shove the chips in the table because you think everything's going to be good. I think there's too many other things that could go bad.
Yeah. Unlikely source of good news, but I found the article to be fascinating. Bring up BTI. I want to get Cody in on this one. Did you read this about the tobacco-based vaccine, Cody?
I did not.
Man, I'll send you the article. I got to send it to you. British American Tobacco, actually, they found that some of the antigens that they can pull from some of the actual plants of tobacco plants are used to re-inject it back into the body. They're finding some positive trials from this. They actually think tobacco might be a source of some medicine here, which is fascinating. Not something you would have expected to hear, because I know smoking and tobacco have been the people they've been pointing out, saying this is one of the problems with some of the victims. But interesting. Cody, I'll send you that article. We're seeing all kinds of companies from areas you would have not thought about.
Quick thing on that. That doesn't mean smoking's okay. It doesn't mean using tobacco is okay.
No, they're not saying smoke your way through the coronavirus.
I just want to make sure that we say like that is not.
Yeah. So the antigen is a substance which induces an immune response in the body, in particular fosters the production of antibodies. They're pulling it from a genetic sequence through these tobacco plants. And then they're planning on re-injecting that back into the medicine, the whole thing. It was a really fascinating read. I wanted to send it to you this morning and get your take on it.
Share it in the YouTube. That way we can all take a read at that. I'm curious.
Yep. Next one, bring up Zoom here, Noah. Zoom got a downgrade. They had all the security risks over the weekend. In fact, Credit Suisse came out, guys, and said, you're just too expensive. At the valuations that you're at, there's too much risk. They got downgraded. The stock came back down here. Noah, how do you make sense of that chart, if there's any way to do so?
Well, it had a really nice looking momentum, pop, and then a deep retracement into a support resistance zone, and then it's dropped a little bit deeper. If you like that 50-period moving average, a little green signal candle, that might encourage some bulls. The speed of that sell off down into support makes me think you might get a right shoulder, like whatever rally you get out of there. You see another drop after that. But I mean, that's the thing is, I was looking at that just from a value perspective, 2 months ago, 3 months ago, it was trading at $60, $70 a share, and then it shoots up to a high of 164. And again, they've had a sudden influx of users, and a vast majority of those have been people who have been using their free subscription service. My question is how many businesses now look at this and say, oh, hey, businesses that were resistant to doing online format, online meeting, people working from home, et cetera. How many are going to embrace that? And you're going to see an increase in subscription base on that. That's something the data would need to see proof out. In the meantime, people speculate, but I would consider short-term speculation, not long-term investment at this point in time.
And I buy into the Zoom thesis, but it's like anything. Zoom's a good example of how I feel about the whole stock market right now, and it's how I approach investing as a whole. Like when you have these hyperbolic, because as Noah was saying, fundamentals, price trading, the stock was in this range for what, a year, bouncing between $160, and then it just catapults. What do you call it, Noah? Chasing the dragon?
Chasing the dragon, yeah.
Yeah, chasing the dragon can be bad for trading. It can be devastating from an investing point of view. Like when you chase the dragon, this is how people get stuck with Tesla at 900. When we're investing, like caution and eliminating greed is the name of the game. It's yes. Oh, what if MGM goes up to 20? What if Apple goes? Yeah, that's nice. But if you approach it from a sensible valuation, lower levels, naked put at levels you're comfortable, go to the trade tab. Because I buy into the Zoom thesis 100%.
Mm-hmm.
I buy into I can see at a minimum things increasing a little bit, right? Things increasing a little bit. Give me the April. Well, we'll just stick with there. You split the middle. But it's all a question then of what price level do you feel comfortable at? Like if you sell puts back in that range where it was before all of this, and you buy the thesis and you buy the product, and once again, if you don't buy that, then you're not even thinking about it. But like getting credits at lower levels, in which if you get put the stock, you're like, all right, that's the level. It's like gold. It's like oil. It's like everything else. Zoom is just how I'm approaching the whole market right now. Like buying it at elevated levels with so many unknowns, as Noah was saying, that can be kind of a foolish game as a general rule all the time. Mm-hmm. But like finding those levels, if you believe in the company, if you believe in the product, if you believe in the management, if you believe in the general thesis of growth, which I do with Zoom, I think Zoom's numbers are going to, even after we're after this, people are getting used to it. They're buying packages. The companies will realize, we don't need all this office space. We can have meetings at home. It's going to be part of I think it's going to be a widespread part of a lot of institutions' framework. Mm-hmm. And so, but what price do you feel comfortable getting in? Like there's some reasonable put levels down there that, are very, very
premiums are plenty fat, are they not? So
they are
real good premiums, deep out of the money for sure. You're at 119. You can go all the way to the 75 strike and probably pick up $1.25, I'd guess.
Like $1.25.
Yeah.
Hey, it says $1.40 now. Whether or not you get filled at that price, sure.
Yeah.
But
yeah. Interesting. I like the idea. And by the way, I really like the idea of selling a naked put off of a volatility day like today. When you get a downgrade, it gets priced in, you get a gap down into the 50, and then you get a little bit more premium from the volatility. So definitely a viable idea. Give me Tesla.
But it's a long-term play, right? This is not. We don't sell naked puts. And let me
Unless
make
you're
this
willing to
very
take
clear.
ownership and you got the money to pay for
We
the
at
100 shares.
Tackle Trading do not advocate selling puts as a trade.
Mm-hmm.
We don't teach it. We don't advocate it. In fact, we have some very foolish things to say about it. Naked puts is a powerful investing tool, a powerful investing tool. But for a trading pool, no, learn to day trade, learn to swing trade. Do not do it. If you want to do something, do a bull put spread.
Well, I mean, credit spreads are for the traders. Naked puts are for the investors. How about that?
I like that. Yeah, I like that way of thinking about it. No question about it.
Absolutely.
Tesla here was upgraded at Jefferies to a buy here. Oh, talk about a company. I mean, I've been wrong on this company for so long, so I'm probably going to be wrong again. The idea of buying Tesla right now, high end $100,000 cars, Noah.
Their debt ratio is out of sight. And consumption on those things is going to be down. But hey, in the meantime, they are making ventilators out of retrofitted car parts.
I like the response there. I thought that was cool. Absolutely. There's no question about it. We're about to wrap up here. I do want to run through a couple of quick stocks from over the weekend. And if you're a pro member, you already know this. Our commodity report, our option report, our stock report, our Forex report, those are some really important things to start your week with to get prepared. I got to tell you, I loved the stock report from Gino and the option report from Tyler. Look at some on the bull list here today. Noah, Clorox, CLX. Nice little meandering.
What to like about that disinfecting little wonder.
Amazon. Now, I don't know if this is an investment candidate for me, but you pop 2,000. That's a pretty easy setup, guys.
I'll give you a good investment thesis for Amazon. My 3-year-old will constantly tell me, that's on Amazon Prime, Dad.
There you go. Still on the bear side, take a look at Chipotle. There's some sell the rip still in the market here, guys. Break below 600. I know it's up big today. Look at STX, Seagate. Still bear retracements. FTV, maybe one more.
I like this. This was a pretty technical setup.
Yeah, and even one last one, GSK. Guys, this market's nowhere near out of the woods here just because we're up on a Monday. Just like if it was down tomorrow, doesn't mean we're all the way going to 1,500 S&P in a week. You're going to get increased volatility. Even as I was bouncing through my little checklist here, Mark, as we're ending the show, I just saw a new report out of JP Morgan that we're going to have a vicious spiral as bad as the financial crisis. These Wall Street guys can't get on the same page, can they?
Well, no, it's because, and I said this in the Trading Justice newsletter, and it's 6,000 words, but hey, it gives you a very accurate depiction of all of the arguments right now. Mm-hmm. And nobody knows anything. So the Wall Street guys, they're all over the place. Mm-hmm. Because nobody knows anything. It is all guesswork. It's all guesswork right now. So how do you want to strategically approach this? I think there's smart ways to strategically approach it. I share those every weekend. Noah shares his on the lounge. I mean, Gino shares. There's smart ways to strategically approach it, but we're living in an information vacuum right now. Mm-hmm. And so they're going to be all over the place.
By the way, last thought of the day here, Larry. Welcome, Larry. It's always good to see your name. We're going to be talking a little bit later. Larry Velasco, who's a Hall of Fame trader from over there at Legacy, he comes in and says, guys, it's time to buy insurance. If you were waiting for cheaper insurance, it's the cheapest VIX price we've seen in a month here, guys. I know.
Well, and that's why he's a Hall of Fame member, right?
Yeah.
Because, Tim, you've shared this with me. And I don't go there because I don't, but I do, it does resonate. Tim will share with me, he's like, these Wall Street guys are going to pump up this just so they can reposition their portfolios and dump it.
I've been on the firm camp that this is a pump and dump for 10 days.
Isn't that what I said last week? Naturally, Tim, if you want somebody to buy something from you, you got to get them interested in it first, right?
That's right.
So hey, it's all good. It's all good. Because you think about the forecast, and it's really hard to see how things are great. Maybe they're not so bad, but as far as seeing things are great. But if they can get short-term prices up, reallocate their portfolio. I mean, that makes a lot of sense. But
Here's the thing with the fundamental side of that though, Mark, because 70% of the GDP is from consumer spending. And we all know consumers are going to change their behavior. Whether or not they reopen the, stay-at-home orders at the end of April and all that kind of stuff, you're going to see less demand for every kind of group-based event, from travel, from all that kind of stuff. There'll be a lot of people are going to say, "Hey, listen, I'm not going on the airplane right now. I'm going to change my business model in the short term, work from home," right? So you absolutely will see a change in consumer behavior. You're going to see unemployment, corporate behavior, whether they hire those people back will be very interesting, because we are already at 13% unemployment today. That's what Janet Yellen came out and said this morning. Okay. So we are at 13% unemployment. We're going to see all of these economic ramifications play themselves out over time. We just don't have answers to how the market, how the Fed stimulus, and how consumers are going to respond to this new world that we're living in, period. So any of these people dancing on their desk today because markets are up at resistance, I'm just thinking, I mean, guys, I'm reading the smartest people in the room, and they're all telling me that on any rally, they're looking for a short position. Now, are there scenarios, Mark, where the bull argument can win? 100%. Nobody knows the future in the market. Anybody who tells you they know 100% what is going to happen, they're up in the night, right? But my thing is, we have a very, very simple pump and dump kind of scenario developing, in my opinion. Even a breakout at 2,600. Could we rally to 2,800? Of course. 200 points in this market, Noah. That's a day. Sometimes it's one day in the market, right?
Well, what's the ATR on the S&P right now on the daily chart? It's 166 points. So yeah, that's just,
And I'll tell you, Mark, if things change to convince me otherwise, I'll change my opinion. That's the beauty of being an investor. With new information, new data, new chart patterns, you can develop a new posture over time as things come out. And there's nothing anybody in this world would like more than good data on the coronavirus. Part of my bear argument is really has nothing to do with the coronavirus at this point. I think the market might shrug off coronavirus data. But that doesn't change consumer behavior or unemployment or earnings.
The bulls will shrug it off when it's bad.
Right.
But on days like today, where they can get a glimmer of hope, they'll buy it up.
Yeah.
Is everyone selectively looking? Not everyone, because we try not to, but a lot of people are selectively looking at data that they want to see.
Strong recommendation. And I'm going to drop one link, then we're going to wrap this whole thing, Cody. Go and read the newsletter from over the weekend once we get it published here today on the Trading Justice podcast website. Over at tradingjustice.com. In fact, let me look here. Last week, we did an episode 366 on investing risks. Tradingjustice.com will have that newsletter up there today. And Mark did a really, really excellent deep dive on all these scenarios that might play themselves out. But Cody, here's the beauty of our halftime show. We can come back and break it down daily. Let's wrap this thing. Great job today, guys. Always appreciate you, Noah, and you, Mark. And Cody, once you're back, we are much smoother. We didn't have any problems launching. And again, young man, congratulations. What a beautiful blessing to have your son coming home from the hospital today. That's awesome.
I can't wait. Yeah, I'm excited.
Yeah, that's awesome. All right, guys, we'll see you tomorrow. If you're bouncing out, make sure you give me a like and a share before you do. Get in the game. We'll see you guys tomorrow in the halftime report.